Hey traders, Jason here with Day Trading Fearless. In this video, we're going to go over what the double moving average line is, how it works, and a great way to scalp if you're looking for like 1 or 2 points. Even trend trading, but this is more of a scalping type of a tool. So I'll dive deep into it, but first do me a favor, hit the like button and subscribe to my channel, and also make sure you check out my S&P Emini weekly trade zones and also my video course, $99 lifetime subscription, one-time payment. Links down below in the description, or go to my website daytradingfearless.com. But let's jump right into this video. So this is a special code. I'll leave a link down below of this chart layout. I'll kind of quickly run over what's on this chart. And essentially, you have these yellow lines over here, first hour high and low, right, for the yellow lines, and then the red is the Fibonacci extensions. Then we also have shadow traders levels in there. You could get those from his website every morning. All I care about are value area high and low from the previous day. And then we have a 200 period moving average. And then we have this guy, RVI down below. And then we have this guy, which is when the line's blue, the candles turn blue. When the lines are red, the candles turn red. And then sometimes they'll turn green when price gets way oversold. And if it gets even more oversold, they'll turn white. So it's just a way of seeing it. And we could see where oversold or overbought, right? So right here we got way oversold, and then we got even more overbought. And candles turn white, and then you have pullback, right? And what this is for is looking for divergence, right? Essentially, when you get way oversold, the candles will turn green like this, right? And then what happens, you'll see a pullback and then a new high, okay? And that new high, the candles are back to blue. That's kind of telling you, hey, look for divergence, because what's going on is we are no longer oversold, but or overbought in this case, but we're making new highs. So something to be very, very aware of. So hopefully this kind of helps you guys out with your own trading and all that. But that's a brief description of that, but let's kind of jump into what the settings are and how it works, right? Essentially, this is a 821 DMA, right? Essentially, they're just moving average lines. It's an 8 period with a 21. The 8 is an exponential, the moving average. And then the 21 is actually a variable. And I use this on the 512 tick chart. Okay, that's something really, really important, because when you start to go to other charts, minutes, I don't think it works as well. But on the 512 tick chart for the S&P Emini futures, it is a amazing indicator study to use, right? Especially for scalping, right? And sometimes what I'll do is I'll look for a trend, right? Right now we're really choppy. We could see we're kind of chopping around right here. Go up, go down, go up, go down, right? There's really no trend. So I want to see this break away to either the upside or downside, and then look for a pullback, something similar to this, right? We start to fall, create a waterfall, bounce, and then get back up. And usually the very first touch, I'll look for a quick little short. And I kind of, with the E-minis right now, with the volatility, I'm using a 2-point stop. It's either it's going to work or it's not. But think about this, right? We go from blue to red, right? Kind of go back to blue. We bounce, okay? And then this is what I'm looking for, the very first pullback into that level. And I want to look to the left of the chart. Is there a potential support level I can lean against, right? That is a confluence level. And right here, we have this little swing low. We have this little high right here, right? And then price comes back up, kind of bounces around. Old support becomes new resistance, vice versa. And then look at this. We turn blue, come back, and we bounce and start to make new highs. Now, my game plan is this is for more scalping, where I'm only looking for like 1 point in this type of trading. You can look for more. Sometimes I do, but normally I'm just looking. They're called smash and grab trades. Just kind of jump in, grab a quick little point or two, and that's it. So hopefully this kind of helps with it. The other thing that I really like about this chart is it's great if you want to use Fibonacci's, right? So if you're looking at the Fibonacci pullback trade, again, links down below if you want to learn how that trade works. But if you're looking for a 61.8% pullback, well, we could see price right here, right, has pullbacks, and there is a nice support level, right, because we pulled back off to the races, came back, bounced from here. So we should probably see a potential pullback here, or if we do, we would see a bounce potentially, and then maybe bounce back up to the 38%. That's one way of trading it. Now, that's a little more risk. If you don't want as much risk, you could draw different fib levels, right? And just anything below the 39.02, the 75 area. I use the 70, but I leave it on my chart for 75 because I want to give it a little extra room, kind of for it to play around. But again, couple points of risk, and you're looking for usually a 1-to-1 risk reward type of trade using Fibonacci's. But you're also able to see patterns. You could see divergences, right? Look at this divergence right here. So multiple different ways to trade using this. Maybe this would be green, bounce, and then back to red. That would tell you, hey, look, we got oversold. Now, the reason it didn't turn green here is we weren't oversold enough, right? It has to meet a certain threshold. I believe it's below 10 on the RVI, and then bounce, and then you'd be like, hey, there's divergence because we're still red, and maybe trade the waterfall, right? Very low risk, look for a bounce, or you can always look for kickbacks that I teach and all that. So hopefully that works. Like I said, I'll leave a link down below in the description. And with that being said, as always, thank you for watching these videos, and we'll talk to you soon.